Hello friends, today I am going to discuss about probable interview questions for order to cash profile. So if you are preparing to attend an interview relating to order to cash profile or joining any accounts receivable team, then this video is going to help you in understanding what type of interview questions you may face during your interview. Just to give you an overview, accounts receivable team is one of the important team in finance department because you have to deal with the customer, you have to recognize revenue, you have to collect cash. So a lot of different activities are there in order to cash profile. So let's start with questions. I'll explain you more about how to answer those questions and what logics applies behind those answers. So let's start with first question. What is the major role of a person working in order to cash department, right? What are the roles and responsibilities of a person who will be working in O2C department? So here are the key responsibilities. The first one is ensure all invoices are issued to the customer on time when there is sale of goods or service. That is the first important role of O2C team. Okay. Check that the invoice issued to the customer is accurate as per the agreement. Third, revenue recognition. Very important for the organization. All sales are recognized as per the conditions mentioned in Ind AS 115. Fourth, collection. Ensure all payments from customers are made on time. For any delay, dunning process is followed. That means you are following up with the customers and ensuring that the payment is coming on time. Next, cash application. Apply the payment received from customer to the correct invoice outstanding. Last one, correct accounting of provision for bad debts and bad debts when customer fails to make payment. Next question. Can you explain the key steps involved in O2C process? Okay, very important. You will find this question in maximum interviews. The first process is order creation based on customer requirement. So when the customer wants to buy something from the supplier has to create an order for that. And the same order is distributed to respective department who has to act on the sale, right? What happens next? Identification and packing of material, okay, based on the customer requirement. And once the goods are identified, it is shipped to the customer. It could be rail, it could be road, it can be exported. And when the goods are shipped, at the same time, the invoice is printed or generated from the accounting system. Then accounting of revenue when risks and reward transport to the customer. So as per Ind AS 115, revenue can be recognized only when the risks and reward transports to the customer. Hence, the O2C team has to validate at what point of time the revenue is transferring to the risks and reward is transferred to the customer. And the last is accounting of payment received from customer. Once you get the payment from the customer, you have to ensure that it is correctly accounted so that the balance is not outstanding for the customer. Next question. What is the role of credit management in the O2C process? Okay, so there will be a team or there could be a person who will be managing the credit terms for the customers. Let's see. So credit management involves assessing the credit worthiness of the customers before allowing them to place orders on credit. Okay, so this ensures that the company minimize the risk of non-payment by customer. And few companies, they keep the credit limit based on the credit worthiness, and no sale would be made if the outstanding balance crosses the credit limit. Correct? So for each customer, they'll have a limit. For example, X Limited, the limit is 50 lakhs. So once the outstanding balance is more than 50 lakhs, you can't raise the invoice. So it all depends on the company to fix the limits based on the credit worthiness of the customer. Next question. What is the meaning of payment terms mentioned in the invoice issued to the customer? Okay, so when you issue invoice to the customer, you will be mentioning the payment terms or the credit period. So payment terms is the credit period provided to the customer to make the payment. If the customer fails to make the payment within the credit period, then the O2C team has to follow up with the customer to ensure that the payments are received on time. What happens when the check received from the customer is dishonored by the bank? Okay, that means you have received a check from the customer, but the bank has not encashed it because of any reason. So the accounting entry, what you need to post immediately once you get the confirmation from the bank that the check is not honored, is reversing the entry what you have posted during accounting of the check. So what is the reverse entry? Sundry debtors account debited to bank. Then the customer has to intimate about the issue and the reason for bank not honoring the check. Okay, the customer may demand immediate, sorry, the supplier may demand immediate payment as the payment has not been received within the credit period. What is the process of cash application? Okay, so details of payment from customer has to be received along with invoice reference. All deduction made by the customer has to be identified and the amount to be applied to respective invoices correctly. That means whatever amount you receive from the customer, you have to identify invoice by invoice and apply, or you can say clear those invoices correctly. Next question. What are different types of deduction the customer can make while making payment? This is quite interesting question. And most of the interview they ask this to understand that whether you have knowledge about the deductions what the customer can make from your payment. So deduction can be as per the requirement of law or can be as per the clause mentioned in the agreement. Okay. So certain deduction has to be as per the law requirement. For example, TDS. So if your invoice qualifies for TDS, that means the customer has to deduct TDS and pay the net amount to you. And if there are any clause mentioned in the agreement which gives the right to the customer to deduct, then he will deduct and make payment to you. What could be the cases? One is retention amount. Okay. So when you do any specific job for the customer may have a clause in the agreement saying that I'll wait for 6 months and 12 months and pay one portion of the payment. So he may release 95% payment now and 5% he'll keep as a retention money and he'll pay when he is satisfied for that particular period that the quality of the job is good. Second, penalty for not supplying goods on time. So if there is a clause in the agreement saying that the particular goods has to reach the customer place on particular date, and if it doesn't happen, the customer has the right to deduct that amount from your payment. Third, damages for goods destroyed during the shipment. So if there is any damage during shipment, then the customer can deduct that amount from your payment. Next question. What is the entry to be posted for receiving payment from customer of an invoice rupees 1 lakh after deducting TDS of 10%? So the entry what you are going to post now is bank account debited 90,000 because 10% TDS is deducted. Then TDS receivable 10,000. How TDS receivable is an asset for the company or you are debiting to TDS receivable? Because the customer will deduct this amount and remit to the government and he will file return quoting your PAN number. So what will happen? This amount will get reflected in 26As of the supplier, and when supplier will pay advance tax or file income tax return, can take the benefit of this TDS receivable as advance tax. Hence, it is an asset for the supplier. So in this entry, you can see bank debited 90,000, TDS receivable also an asset, hence 10,000 to customer 1 lakh. Next question. What is customer reconciliation? What could be the reason for difference in balances? Okay. So customer reconciliation is a process that compares a company's internal records to customer statements and invoices to ensure that all records are correct and accurate. The goal is to identify and resolve any discrepancies between the two set of records. Okay. Now let's understand what could be the reasons for the difference. Wrong application of cash received. That means you have received the money for X invoice, but you are accounting it in Y. TDS deduction not accounted correctly. That means you have not recorded or you have missed to record the TDS amount. For example, in question number 8, if the accountant who is posting the entry miss the TDS receivable entry, then he will post entries bank to customer 90,000, 90,000, and the customer still will be showing 10,000 receivable. Correct? So you have to ensure that whenever the TDS is deducted by the customer, at the same time, the supplier also record the TDS deducted. Otherwise, it will show overstated customer balance. Then next is retention amount not accounted. Next, customer issued check but not received by finance team. So when the customer is issuing check, obviously he will show that payment is completed. And as the finance team has not received the check, so the finance team will not record any bank receipt. And the last one is customer balance written off, but customer still reports payable. That means after many follow-up, you saw that you're not able to collect the money. You have posted an entry to write off the customer balance. But when you saw the statement from the customer, you can find that still the customer reports payable to supplier. Question. What is the major condition to be checked under Ind AS 115 to recognize the revenue? So as per Ind AS 115, revenue can be recognized only when the risks and reward connected to the sale of goods is transferred to the customer. O2C team has to verify all documents supporting risks and reward transfer before month-end closing to ensure correct revenue accounting. So the key word here, what you hear is risks and reward connected to the sales has to be transferred before the revenue is recognized in the books of accounts. When is risks and reward transferred to customer if the Incoterms agreed is X work, FOP or CIF? Okay. So X work, FOP and CIF are Incoterms. The meaning of Incoterms is when the supplier and the customer they're agreeing to sell the goods, they determine at what point of time the risks and rewards should transfer so that the revenue can be recognized in the books of seller. At the same time, the buyer also can show those items as goods in transit or inventory. Let's see. So risks and reward is transferred to the customer based on the Incoterms agreed and mentioned in the agreement. So in case of X work, the risks and reward is transferred when goods moves out of the factory gate. In case of FOB and CIF, the risks and reward is transferred on the date mentioned in the bill of lading. And bill of lading is the document which will be issued by the shipping company. Next question. Let's take an example. X Limited exported finished goods, Incoterm is FOB, to London, and the goods were moved out of the factory on 28th of September. The goods reached the port on 3rd October and the bill of lading was issued on 16th October. Can X Limited recognize revenue in the month of September? Okay. So in case of FOB Incoterms, the revenue has to be recorded only when the bill of lading is issued to the seller. And in this case, revenue can't be recognized in the month of September as the bill of lading was issued on 16th October. So revenue will be recognized only in the month of October. This is very critical for the O2C team to examine all these documents before the month end to ensure that the recording of revenue is as per Ind AS 115 requirement. Next question. How advance received from customer is accounted? Whether revenue is accounted based on pro forma invoice issued to the customer. So advance received from customer is always reported as liability, even though the amount received is not refundable. As the supplier has not completed his obligation, that is your sales of goods or services, the supplier can't treat the amount received as revenue. And once the invoice is raised, the supplier can adjust the amount received in advance based on the agreed terms. It can be full amount or it can be some portion of the advance received based on the agreement what the supplier is having with the customer. Next question. What is the accounting entry for sales return when customer rejects the good? Okay. This is quite interesting and you will get in maximum interviews about this question. Okay. So the answer here is there are two legs. One is the revenue, one is the inventory. Because when it is rejected by the customer, you are going to get back these goods to your factory as well, right? So what is the entry you are going to post? The first one is reversal of revenue. That is revenue or sales debited. And at the time of sales, you have created a GST liability which you are going to collect from the customer and pay to the government. Now this GST liability has to be reversed because the sales is reversed now. Hence GST payable account debited to customer account. And now the inventory is coming back to your factory. So the entry what we are going to post is inventory account debited to cost of sales. Correct? So the profit or loss what is occurred in these sales also has been reversed by passing these two entries. Next question. What is deferred revenue? Explain with an example. Revenue which is deferred to subsequent period is called as deferred revenue. Example, annual maintenance contract for 12 months. Even though the invoice is raised and customer has made the payment, the obligation remains for 12 months and the seller can't recognize the full invoice value as revenue. The revenue has to be allocated to 12 months, right? It doesn't matter that you have received the money or not. It all matters is whether you have obligations to be fulfilled in subsequent months or years. Last question. When provision for bad debt to be created for a customer? After multiple follow-up, if the customer fails to make the payment, the supplier on conservative view can take provision for bad debt and later based on situation can write off the balance if required. So this is all about probable questions what you may get during O2C interviews. If you like the presentation and video, please like and share this video, subscribe to the channel. I'll come with few more different videos on similar topics which will help you to face the interview. Thank you.